for open house. How many of you are part of the Apex open house that's going on right now? If I can just get a quick show of hands there real quick. All right, great, perfect. Glad to have you on with us. Secondly, how many of you are Nadex traders? Like, how many of you actively currently trade Nadex binaries? Whether you trade demo or live, does everybody on here understand the basics of Nadex binaries? Or have you been through the course that I have on the Apex website here? Okay. All right, and I'm going to also guess, therefore, that all of you have been through the ultimate power play. Instead of yes on this one, raise your hand and say no if you've not taken the ultimate power play course for Nadex binaries and spreads. Everybody's taken that as well? Okay, good. Then we should all be up to speed here and where we need to be. So, okay, what we want to talk about today is, like I said, if you've been through the course on ultimate power plays with binaries and through the power play course in general, then you're very familiar with the power play course and the setup. Okay. So some of what I'm going to cover here for you is going to be a little bit basic. I think most of you know this, most of you that have been with us for a while, but a few of you might be new and not quite get this part. You may understand the basics of binaries, but I want to make sure you understand the different type of binaries. So I don't want to spend too long on it. And let me just get Ninja up and going here as well. But I want to make sure that everybody understands the difference between in the money, at the money, and out of the money binaries. Okay, let me do another quick poll here. Is there anybody that can say I don't understand that? Just feel free to say no. If you don't know the ins and out difference of in the money, at the money, and out of the money binaries. Okay. Got a couple people. Well, we're just going to real quick kind of recap a thing or two because you definitely need to know that for what we're going to go over here. All right. For some of you, this might be very basic, but it's always good to recap. And you got to also remember there was a time where you didn't know that either, right? So, okay, just real quick here. We're on the Nadex demo platform, okay? And everybody can see the screen okay, right? Everybody sees the demo platform here? And we've got a bunch of different binary strikes here, okay? Where is the current Nadex indicative? Where are we at right now? We're at 58.94, okay? So that's where the market is right now. That's where the Nadex indicative is right now. All right, right now it's at 58.93, 94, right in there, okay? Let's see here. Cannot see the screen. Can you see the screen now? Everybody should be able to see the screen. Leonard, you see it now? Everyone else says they can see it. If you can't see it, you may want to log off and log right back in. But it looks like everybody's got it here. Okay. All right, so the Nadex indicative is at 58.93, 58.94. It's kind of going back and forth there. Take a look at this Nadex binary strike right here, 58.93. So this binary strike is right at where the market was, okay? And where is the pricing on this binary? You can sell it for 47, 48. You can buy it for a little over 50, approximately $50, right? So when the binary strike is right close to right where the market is, we know that binary is priced approximately at $50. That's what's called an at the money binary, because that binary strike is at approximately the same price as the market. And therefore the binary is priced approximately at $50. Most of you know this, right? Well, why is that? Well, because at expiration, a binary is worth either what? Either 0 or 100. That's it. At expiration, that's the only two outcomes that could possibly be, right? So at expiration, it has to be one or the other, 0 or 100. So if you've got some time till expiration, and the market is right at about the same place as the strike, well, that binary has to be priced right around 50, right? Because it's right in the middle between 0 and 100. Right now, that strike price is right around the market price. So the market could go up and then expire worth 100, or it could go down and expire worth 0, right? Does that make sense to everybody? If the strike is right around the market, it's going to be priced around 50 bucks because it's right in the middle between 0 and 100. Got to see which way it goes. We all get that. Okay? Make sense? Now, why is this binary down here priced closer to 0? So if you haven't been on with this before, when you look at all these strikes, I remember when I was brand new and I'd pull up this strike ladder with Nadex and I saw all these different strikes and all these different prices and what do I choose? It was really confusing, okay? But in your head, okay, if you look, when you pull up this strike ladder, you look for the indicative price, 58.92. You look for the closest strike to that, 58.93. You find the approximate area of 50 in here, okay? Draw an imaginary line right here. Okay, draw an imaginary line in your head right there. And so what does that tell you when you draw this imaginary line? It really breaks up the strike ladder for you because you draw this line right here and you know that that's where the market is. You know, anything down here on the buy side is already above where the market is. So it's going to be priced closer to 100, right? You know, anything up here above that line is going to be priced lower going down towards 0. Okay, so yeah, Joe, you just draw like a midline there. So you know the market is right in here. So the market could go up a little and expire in the money, go down a little, expire out of the money. Why is this one up here priced at 20, 22? Well, where is it? The strike is 59.13. All a binary is a statement. The US Tech 100 will expire above 59.13. Well, right here, the market is way down at 58.93. That's a long ways away from where the market currently is, right? It's way out of the money. What would have to happen to the market for this binary to go up in price? The market has to go up from 58.94 way up to 59.13 just to be at the money. It's got to do 3 things, right, Joe? It's got to make a huge move. It's got to make a huge move in the right direction, and it's got to make that huge move in the right direction before expiration, right? Okay, now, quick little quiz question here. If I were to buy this binary right here for $17, $18, and before expiration, the market moves up to this strike of 59.13. So I bought it for 19 bucks. The market's way down here. The market moves up to 59.13. I bought it for 18 bucks. What will the binary approximately be worth at that time before expiration if the market moves up and hits that strike? No, Randall, not at expiration, but before expiration. Okay? If I buy it right now, let's say this one right here, Randall, $59.13. If I buy it right now for $21, and before expiration, the market moves up from where it is and moves all the way up to $59.13. At that time, what will that binary be worth? I bought it for 20. It'll be worth about 50 bucks. So remember we talked about when the market is right about the same as a strike, it's priced around 50 bucks before expiration. Does that make sense? Okay. You with me there, Randall? Of why it's not 100 at expiration to be 100, but I'm talking before expiration. Because if the market moves up to this level at 59.13, then this binary now becomes the at the money binary, around 50 bucks. Okay? So we know that these are priced lower because they're priced closer to 0, okay? And we know these are priced higher because they're priced closer to 100, all right? And the reason these are priced lower is because the market has to move all the way up there, has to move in that direction, and has to move all the way up there in that direction before expiration. A lot of things have to happen for these lower price ones to be profitable, okay? So if we have our imaginary line right here around 50, we see that these are 65, 73, 80. These are priced closer to 100, okay? And again, why is that? Why are they priced closer to 100? Well, because these are called in the money binaries, right? They're already in the money. Because this one right here, for example, what is this saying? This statement says the US Tech 100 will expire greater than 5881. Well, it's already at 5892. It's already, the market's already 10 or 11 points above this. It's already a true statement. So as long as the market stays above it, it will expire being worth $100, right? So I can buy this one for right now 81 bucks, and as long as the market stays above it, it'll expire worth $100. So it's a much higher probability that the market will stay above this strike than it is that the market will move way up to one of these strikes, correct? Because it's already a true statement at the moment, you know, unless the market just completely turns around. But let's say, for example, that you have a bias to go long. You have a setup to go long, to buy, for the market to go up. Well, in that situation, if the market, if you have a bias, you know, on your chart, your system to go up, these have a much higher probability of the statement remaining true than it does for these to become true. Everybody agree with that? Everybody understand that? Yeah, John, exactly. You know, you're up here in the 80s, you're looking like an 80% probability. You're down here in the 18s, you're like an 18, 15% probability. Okay? But we know that we have a lot bigger risk, right? If I go here and I want to buy this binary right here for, let's pull this one up, for, you know, $72, well, we know that I have a max loss of $72 and a max profit of $27. So I like this high probability. I like the probabilities being up in the 70%, you know, 73, 72%. But I don't like risking $72 to only make 27, right? Okay, but that's an in the money binary. Okay, so that makes sense. Out at the money is right around 50 when the strike and the market are the same. In the money means the price closer to 100 because the statement's already true. And out of the money is that they're way far away. Everybody get that? Make sense? Little quick review there. Okay. Now, so we know that with an at the money binary, you know, it's like 50-50, right? We know that out of the money is lower probabilities. You can kind of figure the probability with the midpoint. Meaning right here, I could buy this one for 22. I could sell it for 26. The midpoint's about 19 or 20. So it's about a 20% probability, okay, in a nutshell. Now, the one thing though, let's just add, let me just add my drawing tool on here real quick. I think many of you understand this, but I just want to revisit the basic here so you can just kind of see, get an understanding of some options here that you have. Okay, so where is this binary right here? 5889. Okay. 5, 8. Wow, let's see here. It's way down here, right? 5, 8, 8, 9. That binary would be right here. Here's a current chart of the NQ, right? And right now, I can buy that binary, 5889. I could buy it for what? About $73, $74. Everybody see that? 5889, 75 bucks. Okay? Now, I'm going to just pop that in my demo account. This is not a trade recommendation. I'm just popping this in my account to get it in there so we can keep an eye on it. Okay? So, if I bought that strike, 5889, the market is way up here at 5905, right? So I've got a pretty nice amount of room there, do I not? I mean, looking at that trade right there, like we're looking at this live. This is a live chart. That's a, live demo. Well, it's a demo account, but it's live, right? We're not looking back. That's a really good amount of room that I have there, isn't it? Does that make sense? Like, I'm feeling pretty comfortable about that amount of room that I have. I really like that. Okay? So, does that make sense? Everything we covered right there. Like I just showed you a live example. Okay? All right. Now, let me just pull one thing up here. Give me just a second. I really want you to see this visually. Okay. So, yes, low. That's an in the money. Because when we're buying a binary, we're saying that this statement will be true, that the market will expire above 58.89. The market's already above 58.89, so it's already a true statement. So it's currently in the money. Now, what happens if the market continues to go up and then the binary expires? Do we win or lose? Win, right? Okay. What if the market just goes flat? Like it's just goes flat and just goes choppy and just stays right here where it is all the way until expiration. Win or lose? Still win the binary, right? Okay. What happens if the market starts to come down between now and expiration? The market comes down, 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 and expires right here at 58.90. Do we win or lose? We still win because the binary strike was 58.89. Okay, Walt? So as long as the market expires above 58.89, it can expire by one tick at 58.89.1 and still. Does that make sense, guys? You understand what I'm saying? Yeah, you're going to be sweating it all right, aren't you? Okay. So here's the difference. What if we had bought one of these out of the money binaries way up here? The market has to do three things. Remember, it has to move a lot. It has to move in our direction. And it has to move in enough time before expiration. So three things have to happen for us to be profitable, right? As opposed to an in the money binary, that three different things could happen and still be profitable. It could go up, it could stay flat, it could even go down as long as it doesn't go down below our strike. Does that make sense? You see the difference there? Okay. Now, I'm not trying to dog out of the money binaries. I actually taught you to trade power plays with out of the money binaries, didn't I? The rule is to get in between $30 and $45. Okay? Preferably around 30. But also, what is the big rule? with power plays, with out of the money binaries? Are we trying to get a binary to go from $30 in value up to $100 and hold it all the way till expiration? Or are we trying to get a binary for about $30, let the market move up and let its value go up to 60, double our money and get out? Right. Because like in this example here, if we've got a binary for 30 bucks up here, if we want to hold it all the way till expiration, again, the market has to go up past that strike, and has to stay above that strike till expiration for this to be worth 100, right? Otherwise, it expires worth 0. So do you understand why when I taught you out of the money binaries with power plays, it's to, hey, get in that binary around 30, let the market go up, let that binary be worth, you know, closer to 60 and get out. That way you're not having to make sure it's above there, and if the market retraces right at expiration, then you have nothing. So does that make sense? Why we don't hold them till expiration? Because when we have a good power play set up, we're expecting that big move. During that move, we know the binary value is going to go up. We just want to take advantage of that and get out. We don't want to wait for it and make it stay above there and wait for it to come back against us. And that's why you don't want to get all greedy about, well, I'm up here and I got it for 30, I could exit at 60. But man, if I just hold on to it, man, it'll be worth 100. Man, I'm going to be greedy and get that extra. Oh, and the market retraced, and now I have 0. 0. I sure wish I would have got out at 60, because then I'd have had $60 in my account. As now, I'm not, you know, I lost the 30 profit and I lost the 30 investment. So does that make sense? Kind of why I taught out of the monies that way. Why we don't hold them. Does it also make sense the value of probability for these in the money binaries? Because they're way down here. See this example? It's way down here. Look at all that room. You see that? Okay. So let's talk a little bit here. So we understand power plays and why we have them set up, you know, for the 30 to 45 risk and to exit. Okay. Now, what is premium collection? Okay. Well, when I say the word premium, what's one of the first things that come to your mind? What is something you pay every month that's a premium to you? Exactly. You pay your insurance premium on your house or your insurance premium on your car, right? So you pay a little bit for that. For what? For insurance. For what? Protection. For comfortability, right? You pay a little bit to have that protection. Sound familiar? I pay a little higher price for a binary to have what? Insurance, some room with this gap, coverage, comfortability. Make sense? Okay. But what is the difference between paying premium and collecting premium? Okay. Well, what we're doing with this strategy is we're having an edge. We're giving ourselves a little bit of insurance space, and we're letting time work in our favor, and letting time decay work in our favor. What do I mean by time decay? Well, let's pull up the Nadex platform again here. Okay, and let's go back to these here. I really wanted to show you the 2 o'clocks, but the market's moved. There's no 2 o'clocks. I'd really not be looking at this on the 3 p.m. expirations. I'd be looking at the 2 p.m. But the market moved, so there's none there to show you. Okay. What happens if I get this binary right here? Or I'm sorry, if I get this binary right here for $28 and the market just sits there, it doesn't go up. And every minute we get closer and closer and closer to expiration. Is this value going to go up? Is this value going to stay the same? Or is it going to just start to go down and down and down the closer we get to expiration? Right, it's just going to start to go down, right? The closer and closer, because it's out of the money, it's low probability. The closer we get to expiration, its probability is going down, especially when the market's not going in our favor, right? So it's going to decay in value in time. Does that make sense? Because right now, if we have an hour and a half to expiration and it's a 24% probability, well, if we only have 30 minutes to expiration and it still has to move the same distance, that's going to be a lot lower probability, right? So it goes down in value. It's time decay. Okay? If I had this binary right here for $78, or even this one for $68, and the market wasn't moving, it was staying right where it was, but we're getting closer and closer to expiration, what's its value going to do? Start to increase, right? Because the probability of it expiring, of the market staying above it, is getting higher and higher the closer we get to expiration. Okay, that's also time decay, but it's actually time decay in your favor. It's premium collection. Kind of, basically, we want to get this binary down here for about 75 bucks, and we just want time to work in our favor. Sure, we want to see the market go up because that just makes us more comfortable. But we don't need the market to go up. We don't need the market to not just stay flat. We're even okay if the market comes down, as long as it doesn't come to our strike. We're wanting time to be in our favor, to get this binary from 75 to closer to 100. Does that make sense to everybody? Any questions on that part right there? Okay, and that is why I say that I actually didn't get to show you a good example. I'm using the 3 o'clocks here because those are the only strikes we have. Okay, I would rather, if I was trading this live, I'd be looking for the 2 o'clock expirations because I only have 27 minutes, right? I'm going to feel a lot more comfortable about the market staying above this level for the next 27 minutes than I am for it staying above that level for the next hour and 27 minutes, right? Everybody follow me there? Okay. So it's collecting premium on a high probability trade. Exactly, Randall. That's what it is. That's exactly what it is. Okay? Everybody understand the concept of that? Any questions on that general concept right there? Makes sense for the pricing, makes sense for giving yourself a little room with insurance. And does everybody understand that I'm showing you a 3 o'clock expiration, but right now it's 1:30? I'd be wanting to get this on like the 2 o'clock expiration, because I want to collect that time premium, but I want as little time as possible to have to do it. Okay? All right, so that's time decay, and that's time in your favor, which is called premium collection. So let's pull up the Ultimate Power Play forum post, and let's look at a couple things here. All right, so let's just pull this up, and let's take a peek at just this number one right here. Okay, y'all have seen this screenshot a million times, right? So we have our number one power play set up. The market went a little higher on less volume, and we've got our cluster and our level and our chop. and the bar closes down, right? And we enter 1 to 3 ticks below this. So the way we taught you to trade binaries is when that market gets 1 to 3 ticks below it, what would you do? You would sell a binary for what? $70 to $65, correct? Because we're selling here with a risk of 35 to 40, 30 to 45 bucks, right? Which means we'd sell $70 to $65. Everybody agree with that statement? Everybody understand? Okay. And we're looking to get out when our money gets doubled. Now, what did you hear taught over and over again here in the power play setup that didn't apply to binaries? It applied to spreads or to futures. When you enter this trade, where is the initial stop placed at? 1 tick above the high, right? That's the initial stop. Everybody remember that? Everybody agree with that? Everybody follow that? And the reason that stop is placed up there is to protect you from, when you enter and the market does some pullbacks and then goes on down, right? Everybody remember that? Okay, yeah, or like a sling comes in. Okay. So, and what was the other thing I told you? That when we enter this out of the money binary, we want to have a minimum of what time to expiration? 20 minutes to an hour, correct? And why was that? Well, because just like on our chart here, we don't want to just have 5 minutes left for that binary to go way up here, for the market to go way up to that out of the money binary, right? We want to give it a little time to make its move and get us some value, a little time to be right. Okay? And that's a great system. I still love that system. That's one of my favorites. Out of the money, low risk, love it, right? But we want at least 20, 25 minutes to an hour. Okay, if you're trading Forex, you want at least an hour, right? But what if we had this set up right here? Okay, and about what time was this set up? It says 1506, so somewhere in there. On NQ, what is something that NQ has? 20-minute binaries, correct? Where is the initial stop for a futures trader or spread trader? Because the entry would have happened here, 1 to 3 ticks below the bar, we would enter right here. But where's the initial stop up here? 1 tick above the high of the bar, right? If we were entering right here, and let's say there was a binary right here that was priced at $50. It would be priced at $50 because the strike and the market were right at the same, correct? We understand that? So if I wanted to buy a strike right here at that stop level, do you think that binary could possibly, based on the strikes, based on the market, based on the time, might possibly be priced around $75, like the example we just looked at? Okay. What do I like about that? If I can get a strike up where that initial stop is, I know that initial stop is placed where it is to help us not get hit with pullbacks, right? And I'm expecting the market to go on down, right? And I could go with the out of the money, risking 30 to 45 bucks. Let's say I can sell one for 30 bucks that's down here, so I need the market to get down there and get out at 60. I make about 30 bucks. Or I could sell, okay, I said 75, but actually this would be This example here was buying for 75. This up here would be for selling at 25, which is the same thing. That makes sense? Right? Make sense? Matt, you just jumped ahead of me. You got it, buddy. So, okay, Eugene, let's look here. If I'm buying for about 77, I'm risking 77. I'm risking about 75 to make 25, right? If I'm selling for 25, that means I'm risking 75 to make about 25. Okay, it's just it's inverted. Okay, so we'll look at another example here in just a second. Okay. All right. So what do I like about that? I'm way up here. And let's say I've got 5. Okay, let's say at this entry point right here, right? This is our entry. Let's say at this entry point, I have 5 minutes to 20 minutes to expiration. Remember, on our out of the monies, you have to go more than 20 or 25 minutes, correct? You have to go more than 20 or 25 minutes. But what if at this entry point, I've got 5 to 20 minutes left to expiration, and I can get a strike up here for 75 bucks. Or, well, I'm sorry, 25 bucks, selling at 25 bucks. Make sense? Whether it's a 20-minute binary or an hourly binary, whatever. But I've got 5 to 20 minutes till expiration, and I can get a $75 risk strike up here. Let's look at a different one. You guys see where I'm going with this? You already following me here? Okay. So let's look at this one. So here's a buy, right? Market comes down on less volume, closes up, got our cluster, got our setup right here, 1 to 3 ticks above. Normal rules, you got to have 20 minutes to an hour of expiration. You're buying for about 30 bucks for it to go up and get out at 60. Okay? Because you got to let it run. But what if at this same time, okay, here's a perfect example. About what time did this happen at? About 9:42, 9:43. We've got about 17 minutes left till the 10 o'clock expiration, correct? So I could do the out of the money at 30 bucks and go the next hour out. But if I can get a strike right here for about $75, all that I have to have happen is for the market to stay above this price for 17 minutes, for the next 17 minutes. Does that make sense? Does everybody follow me where I'm going with this? Tell me if you're not following this where I'm at here. So you see how it's just a little bit different angle? Okay. Now, quick question for you. So do you see how this is a real high probability trade? When you've got a power play setup, you've got 5 to 20 minutes left in expiration. And if you won't always get them, but if you can get a strike down here at $75, do you see how that's a super high probability? Because you've got the great setup to go up. You're way down here on your stop, and you've only got 5 to 15 to 20 minutes for it to stay above here. You like that? Question. Let's say we were doing the normal binary setup, and let's say that we were buying right here for 30 bucks for it to go up and make and get to 60 and make 30 bucks, right? We're risking 30 to make 30 on our normal rules, correct? Everybody agree? Well, we're risking 30 to 45 to make 30 to 45, right? But hopefully we want to risk 30 to make 30. Okay. But you see the power of this short-term $75 binary. What do we not like about it, though? Okay. What do we not like about it? Right here. What the heck? We don't like, why is that doing that? That we're going to risk $74 to make 26. Correct? We're cool with right here under the normal rules I taught you, risk 30 to make 30, right? Because that's a 1-to-1 risk reward ratio. We like that, right? Risk 30 to make 30. We love this room down here in this big insurance at 75 bucks. But we don't want to risk $74 to only make 26 bucks, do we? We do not like that part at all, do we? Everybody agree? You love that room, but you don't like that risk. You love the high probability, but you don't want to risk 74 to make 26. Okay. What is this strike right here? 59.13. Okay. Where's the market at? About 59.14. Where is the pricing at? Approximately $50. What is that called? In the money, out of the money, at the money? At the money. Cool. All right. I want to show you something. Let's go to indice binaries daily. What about the ones that don't expire till the end of the day today? Okay. What is this strike right here? 59.12. Where's the market? 59.12. Sell 47, buy 54, approximately $50. What about the end of the week? Today is Tuesday. These don't even expire till Friday. 59.12 is the strike. Market's at 59.12. Where is that at the money binary priced at approximately? 47.53. 50 bucks. So I like risking 30 to make 30. I don't want to risk 75 to only make 25. So if I buy this at 75 and the market comes down, 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 down before expiration, and it comes all the way to the initial stop that's taught in power plays before expiration, what's it going to be worth? Before expiration, not at expiration, but before expiration, the market comes down and comes to this strike. We just went over it. I showed you examples. It's going to be worth 50 bucks before expiration. And that level is the initial stop that's taught in the power play system, correct? Yeah, 47 realistically, Chip. Yeah, because it's on the sell side. Does everybody get that? Because it's now the at the money binary. So I bought it for 75. If it comes down and hits that level and I get out, what can I get out for approximately? About 50 bucks, 47, 50 bucks. So how much do I risk? How much do I lose? If I follow that rule, I lose approximately 25, 28 bucks. So let's just say I lose about 25 bucks. What's the most I can make if it expires profitable? 25 bucks. So risking 25 to make 25 is there you go, Randall. It's a 1-to-1 risk-reward ratio. Exactly, Ed. The same 1-to-1 risk as the out of the money that you already know how to trade would be. But it gives you a way to trade the power play setups with a little bit of insurance if you can get a risk strike down here with not having to go 20 minutes to an hour out. There is a way to trade them with anywhere from 5 to 20 minutes left. Does that make sense? We'll talk a little more about how to manage the trade, but does that setup make sense right there? Okay? And do you see the power of it? Where you can have a short-term trade with a nice room for comfort here and still get 1-to-1 risk-reward ratio. So what you're doing is you're taking advantage of these high probability binaries down here at the 70 range that are already in the money, but you're not having to risk the full 70 bucks because what do we know? If the price comes down and hits your strike, you exit for around 50 bucks. That is the key rule. Do you get that? Do you get that if you break that rule one time and say, well, the market came down, I just want to hold on to it because I don't want to lose that 25 bucks. I'm going to hold on to it a little longer, and it goes down and expires at 0. You just lost 75 bucks. How many wins will it take just to get back that one loss? 3. Your next 3 wins, you're just getting back to break even. Does that make sense? You don't want to break that rule. It will bite you in the butt. You know? Okay? So yeah, you have to be disciplined that when it hits that strike, you're out. Yeah, Randall, right. Just get out and go on to the next one. It's 25 bucks. About the same risk, if not less, than the out of the money. Makes sense? Yeah, Lowell, you can exit manually, or you can use the stop trigger or the trailing stop. I don't know if you guys have watched any of those videos yet, but they're on the website. Okay? So you like that, Randall? I mean, you see that? Because I know some of you guys have also said, hey, yeah, I can enter a binary trade and I can set my take profit order and I can walk away from the computer. But man, what if my internet goes down or what? I don't like that, but I don't have another hour and a half to sit here and trade. I only got 15 or 20 minutes. You know, I got to leave here at 2 o'clock and I can do a 5 to 20 minute trade like this. So yeah, exactly, Randall. It's the same low risk. If you manage it, it's still the same low risk. It's still a 1-to-1, but you're taking into account the high probability strike way down here. What have we talked a lot about? If you guys have been on the other webinars, what have we talked a ton about last week? Second entries, slings, pullbacks, right? We talked a lot about those pullbacks happening. And we love those pullbacks because they give us what? Oh, here, it pulled back. There's another chance to enter, right? We love those. But we also talked about with an out of the money binary, the reason I told you to go, 20 minutes to an hour out is so that that pullback didn't hit you with the out of the money binary expiring too quickly. Does that make sense? Right? It's like on this example here, when this broke out, Market came up, and then what did it do? It pulled back. But would it have pulled back all the way to here if you got a strike here? No. Okay? So that is why with the out of the monies, you need to give it more time. See, like right here, what time was this? Around 11:48. Look at this pullback, like 43. Like you don't know if right at expiration it would have hit you. So that's why on the out of the monies you want more time. But the in the money, your strike and your stop loss would have been right here. It didn't come back that far, did it? No. Okay. Everybody see the power of that? You like that? So it gives you an extra way to trade binaries with the power play setups. Okay. And yeah, you can go, I like to say 5 to 20 minutes. This actually is kind of what Daryl and I call an EPC trade, expiration premium collection. Daryl and I used to do these type of trades all the time with 5 to 15 minutes left. And what we were looking for was a strike around 75. We knew we'd exit at 50. And we would do them all the time with just 5 minutes left, 8 minutes left. And all we're trying to do is collect that premium. You know, if we've got, you know, an indication that the market's got a bias to go up and we can get that down here, we know that we don't have a lot of time till expiration for that value to zip up. Okay. So let's see here, Walt. So John, if going with the money, you still want a 1 hour for Forex and 20. If you're going, Walt, if you're going out of the money, if you're going out of the money, like what that was originally taught in Power Plays, you still want to go 20 minutes to an hour on indices, and you want an hour on Forex. But if you're going to use this in the money strategy, this is where you want like 5 to 20 minutes, even on Forex. Okay? The reason I had you go further out on Forex is because Forex can make the move slower. But it doesn't mean that Forex is going to come all the way back to that stop. Does that make sense? It's not about that. It's about the longer time needed for the move with the out of the money. Okay? So, now that you got the basics of the concept, there's a couple of rules here though. These are very, very important. Okay? Couple of very important rules. And let's look at, let's just pull up the strike ladder again. Okay. My rule for this is if I buy this binary for $73, okay? First of all, let me back up. Does everybody know what the dark zone is with binaries? Raise your hand if you don't. Okay. So in the last 2 minutes, let's watch, well, crap. Markets have moved. Let's check this here. Markets have all moved, so there's no dark zones to show here. Okay. Yeah, basically like on an hourly binary, it's the last 2 minutes right before expiration where you'll see this happen right here. There's no bid and offers from the market makers. All right. You might have other individual traders like me or you that, you know, has some orders out there. But like if I go here, what do we have? 100 contract, 150 contract. You see all those quotes? That's from the market makers. The last 2 minutes, the market makers pull their quotes. Okay. It's just part of how binaries work. There might be other traders out there that have some orders placed, but normally you might not be able to get out of your position the last 2 minutes. Okay? So if I'm in this position and the market has come all the way down to like right here, and it's about to be the dark zone, my binary is priced around what? 50 or 60 bucks right now, right? I'm down 15 or 20 bucks. Would you agree? If I bought it for 75 and the market's come down to right about here, it's probably worth, 50, 55 bucks. But it's right close to my strike, and I'm about to go into the dark zone. And I know that I won't be able to get out those last 2 minutes. Should I just exit right then and take that $15, $20 hit? Or just leave it out there with no ability to get out, completely stuck, and lose the whole $75? I'm going to get out. Everybody agree? That makes sense? Okay. So with this strategy, I don't want to go into the dark zone. Now, don't press this, and don't ever hold this against me for telling you. But if the market is popped way up here, and I'm like, 30 points in the money, okay, that might be a different story, right? But if I'm anywhere close, for the most part, guys, do not hold into the dark zone. Do you see how that could bite you? The market could take a quick turn down and boom, get out, okay? But with this strategy, I'm not holding till expiration anyway. What I'm doing with this strategy, okay, is I'm going to buy for approximately 75 bucks, and I'm going to look at the strike ladder. As the market moves and as it gets closer, where do the prices, okay, if I buy it here, okay, I can sell for 80, sell for 89, sell for 91, sell for 94. Where does this kind of stop moving on the sell side? 94.25, 94.25, 94.25. If I want to get out before expiration, that's going to be about the most I can get for it, right? And I can see it here on the strike ladder. Does that make sense? You see where it just kind of stops going up in value? So if I buy this for about 70 bucks, 75 bucks, I'm putting in a take profit order at 94. And then I'm going to get out if it goes against me and hits my strike. I'm not going to hold it till expiration. I'm not going to go into Zark zone. I'm going to let it move up in value. The most it really moves, I probably would go 93 just to get me out in time. Okay? So when you're looking at the one-to-one aspect, you probably are going to give up a few dollars right at the end there. But so what? I don't care if I got to give up $5 on every one. I don't want to get hit at expiration. I don't want to get a hit in the dark zone. I don't mind giving up that $5 to be able to have that type of insurance, high probability trade, and only have to be in the trade 5 to 15, 20 minutes. Does that make sense? Because what I don't want to happen is I don't want to buy this for 73. It gets up there to where I could have gotten out at 23 and made 20 bucks, but I want to hold on for 4 more freaking dollars because I'm greedy and I'm dumb. And the market turns around and goes back down to 50 and I'm out. Or goes, right? Guys, don't be greedy about those last 4, 5, 6 bucks. Take the premium collection move from the 70 to 75 up to 90, 93 and just get out. Take that high probability setup. You know it's a great setup because it's a power play. You know you're feeling comfortable because you're down underneath that power play. You're utilizing a 75% probability binary, but following the rule of exiting at the strike, you're able to get a 1-to-1 risk-reward ratio letting time work in your favor to collect premium in 5 to 15 minutes. Right? Take the money and run. Exactly. You guys like that? Did you learn anything today? Did that kind of open up your eyes? Some of you guys knew about premium collection. Some of you guys knew about in the money binaries, but you might not have put these two together with power plays and with only doing in the last 5 to 15 or 20 minutes. Okay, some of you did. That's awesome. Sometimes it takes a refresher to be like, oh yeah, I didn't put those two together. So if I've got only 5 to 20 minutes left on a power play setup, maybe I'll look at in the monies. If, if I've got more time than that, then I'll stick with the out of the monies. They're both great. Okay? That makes sense? Yeah, Johnny, with the 5-minute binaries, you're not going to get a good enough strike here. Okay? We're looking at some potential 5-minute binary systems for us to test later down the road. They're just so hard, man. To know what the market's going to do in 5 minutes, or if you're halfway into it and it's the next 2.5 minutes, it's just, man, it's hard to do. It's too much like gambling. Okay? Matt, no problem, man. I'm glad you were on. Did this help? Did you learn something here, Matt? Good stuff? Good, man. Glad you liked it. Okay? All right, guys. So keep an eye out for these things. Watch out for them. Demo test them. Again, if you've got 5 to 20 minutes left, which you should always have on a 20-minute binary, see if you've got a strike down there. If you don't have the right strike, then don't take it. Do the normal 30-minute binary. Okay? Yep, Kent, absolutely. You can do all that right online. With the stop plug, with the trailing stop, you can put all that set up. Bam. Yep. Now, let's talk about one final piece here, and then I'll let you guys go. Okay? Let's say that, for example's sake, okay? Now, I'm not telling you to do this. You have to play with this. This has to be based on, your risk tolerance and your account size. But let's just say that, let's go back and look at the example we were looking at for most of the time here. So let's say we had a setup here, and this was the perfect time. See, 9:42, right? So let's say we bought a $75 binary right here. Okay, we've got like 17 minutes to expiration. So as long as, if we can get a binary right here like 70 to 77, let's just say, somewhere in there, or we can make 25, 30 bucks, whatever. We only need 17 minutes for it to stay above this level. It's already up here, right? So let's just say that binary expired profitable. You made about 20, 25 bucks on it, right? Okay. Yeah, you can do multiple contracts if you have the account size for it, and you can do 1, 5, 10. Yeah, you can build and do multiple contracts. But what if you bought a binary right here for about 75 bucks, okay? And at the same time, you follow the normal power play rules, and you bought a binary right here for 30. What if you did one of each? Okay? Could you potentially lose on both? Of course you can, right? You could lose 30 here and lose 25 here. You could. But what if you bought here for about 70 bucks, bought here for 30? What are the rules for this 30? I'm going to buy at 30. I'm going to get out at 60. Correct? That's the rules on out of the money. Buy at 30, get out at 60. But what if you got both? And what if you're in the money binary, expired profitable 17 minutes later, and you made $25 on it, right? That $25 just about covered the cost of this $30 one. Just about, right? The winnings from your in the money just about cover your $30 one up here. And you say, okay, I got it for 30, I'm supposed to get out at 60. But since it's basically a free trade, I'm going to just move it up and see if I can not get out until 80. That way, instead of making $30 on it, I'll make 50. That's not following the normal rules, but because I did a combo trade, that out of the money is basically paid for. So I'm going to see if I can get it to go a little bit further. That make sense? And that's kind of a creative little trade there. Okay, don't just hop right in doing those, but it's just something to think about, right? Okay, does that make sense? Where I'm going with that? Okay. Let's take it a step further, and I'm not trying to get crazy here. What if you did this in the money trade for 75 bucks? Okay, trying to make about 25 bucks. And then what if later on down the road, after you're doing well, after you've built your account up, you did 2 of the out of the money contracts right here. You did 2 trades for 30 bucks. Okay? One of them, you had a take profit order at 60. So one of them that you bought for 30, you immediately get out at 60. What does that do? You made 30 bucks on it. So technically it paid for the second one. And that one you let go to 80 or 90, just to see. If it doesn't, you didn't lose anything. That makes sense? Okay, I mean, there's all kind of creative things you can do here. Okay, I know a lot of people that trade out of the money binaries that way, that they always trade them in multiples because they have the account to do it. And what they're looking to do there is they take half off at break even. Let's just say, don't you dare go do this. This is talking about way down the road, okay, when you have a huge account. But let's say that you bought 10 binaries here at 30 bucks, okay? Well, you bought 10 binaries at 30 bucks. When they're suddenly now worth 60, and you sell out of 5 of them, you sell out of half of them, you're at break even, right? Those other 5 that are still out there are paid for by doubling your money on the first 5. So you've got 5 out there that could keep on heading up towards $100. Does that make sense? It's called half off at double, or half off at break even, half off at double, however you want to say it. Okay, now that's getting all crazy and creative. There's a ton of stuff we do like that. There's a ton of stuff we can teach like that and get into advanced training. I can do some of those later on. Daryl and I can pop on and do some of those too. There's all kind of cool stuff when it comes to binaries, okay, that we can do. But I just want to open your eyes a little bit, and I hope if you guys have been on all these other webinars, you've seen what I've been doing this whole time during open house is here's the foundation. Now let's build on it. Now let's add to it. Now here's some more trades. Now here's some other more trades. Now here's some different ways to look at it. Like we're just slowly building here. If I'd covered all of this stuff, I mean, imagine all the webinars I've done the last 2 weeks. If I'd put all of those in that first training and made you go through it all to get your sign-up link, forget it, right? For one, you're not going to go through it. For two, it's just too much. It's overwhelming. Okay? So, cool stuff, guys. Kind of open your eyes to a few new things. Good. Don't go out and start trading this live as soon as we hang up from this webinar. Demo test it and, you know, demo test it and get a handle of it. Okay? Johnny says, still need PP 1, 2, 3, or 4. Yes. Yeah. We're looking for the power play setups, that have the clusters, and this is just a different way to trade them with binaries. Okay. Randall says, I now understand premium collection. Yeah, Randall, all that is, you're collecting the premium with time, right? You get an indication that the market's going up. I mean, look, I don't have all the other chart. I don't have everything on this chart. But without having everything on this chart, what do you guys think this probably was right here? What type of power play setup? Number 4 chop. So if I've got a number 4 chop and it breaks the chop box with the cluster and with everything I want, and I can get a binary way down here to collect time premium on, I'm just letting the markets do its thing, and I'm letting that clock count down and get me from 75 closer to that 100. Yeah, I want the market to go up, but whether it goes up or just stays flat or even comes down just a little bit, as long as time is working in my favor and the market stays above it, I'm collecting the premium. I'm collecting that, delta difference of from 70, 75 bucks getting to the 100. Okay, yeah, Randall, exactly. That might be a situation where I'd be looking at doing the double of getting the in the money down here and doing an out of the money up here to take advantage of the move if I have the account that can afford it. Okay, so all right, guys, good stuff. And I don't know if you guys have seen, I know I always talk about this webinar calendar, but I put a bunch of webinars on the calendar that were pre-recorded webinars. And a lot of them have to do with Nadex stuff, because some of you weren't aware of all these other Nadex trainings that I had out there and binary trainings that I had out there. And so I put a bunch of those on the calendar. Some of them are on the weekends for you. Understanding common mistakes and how to use the strike ladder for trade management, which I kind of just showed you right there, seeing how the prices will move on the strike ladder, right? I've got one right here. You can watch it anytime. Range-bound trading. This is talking about how to take advantage of these in-the-money binaries for range-bound trades, meaning buying and selling. Okay, the scalp one is this one right here, actually trading volatile markets with binaries. But this range bound trading, that's the one where I teach about, is the market ranging just in the, are we in chop and the market's been ranging in this particular area and I'm getting close to an expiration. So I buy a $75 binary right here. At the same exact time, I sell a $25 binary up here. As long as the market expires somewhere between these two lines, do I win on both binaries? Yeah. That's cool, right? It's the same exact thing we just taught of buying an in the money way below and selling it in the money way above when the market's just tweetering. And you just want it to expire range bound within that range, and you make money on both sides. That's what that whole webinar right there is all about. It's pre-recorded. You can watch it anytime. Okay? Yeah, grow and mold, Johnny. Yeah, just letting it sit there. Okay, so a lot of cool stuff here. Chip, John, is there a webinar on trailing for Nadex spreads? I know it's off topic, but wondering if I do the same as you showed us last Friday. Chip, yes, you would do it the same as the trailing that I taught on Friday. You know, when you're watching your chart and you're just keep in mind the number on your chart is going to be different from the number on the Nadex indicative, okay, or the price of your Nadex spread. But you want to always go off of your chart, okay? When the market pulls back, you know, a few ticks above the bar range, you exit your spread, okay? Or you trail. You use the ninja chart for trailing to determine when to get in and out of your spread, okay? Randall says the trailing video was an eye-opener, an aha moment. Awesome, Randall. I'm glad. Sometimes you have to step back, and the biggest thing I think that a lot of you were like, oh, was those pullbacks, those second entries. You know they're coming. You know the market's going to pull back and give you another chance. So don't move your stop up right in its way. You're just stepping right into a slamming door. You know what I mean? Let's see here. If you use the stop, Chip. So if you're using the stop trade, use the trailing one, Chip. Yeah, if you want to trail, yeah, use the trailing plugin. Okay, and you can go through those training videos, and that actually tells you in there how it does base it off of the chart, not the indicative, specifically for that reason. Okay, that way, you know, your trail is matching the ninja chart, not the Nadex price differences. Yes, yep, you're doing it right. Yep, use the trailing. Okay, guys, good stuff. Hope this was helpful. Check it out. Try it out. Got a lot more webinars, you know, coming up here over the next week, and another one a little bit later today. I believe later today I'm talking about transitioning from demo trading to live trading. So if y'all want to check that out, and make sure to, yeah, rewatch this video if you want to rewatch it, and you know, do some demo trading. Follow the rules. Don't be greedy. The biggest thing is here, you have to exit that trade if it comes back and hits the strike and gets down to 50. You have to get out at the dark zone. Do not be greedy, okay? Check out the, you know, training courses on the stop plug and the trailing stops. For any of you guys that were interested in that Labor Day annual promo, that expires tonight at midnight, so take advantage of that if you want. That's just, you know, easy cheesy here. If you're on the website, just go to the sign up link there. Got a lot of stuff coming at you here between now and the end of open house. Free access ends next week on the 13th, and then the prices go up on the 18th. So if you want to get in, make sure you do so at that cheaper price. So, okay, guys, thank you so much. I'll get this recording up, and we'll see you on the next webinar here. Thanks, guys, for the good interaction and great questions. It was good. Okay, put it to use. We'll see you later, guys. Bye. Thank you.